Well, the forecasts from the ADB are really no surprise to the market. The fact is, developing Asia lacks the fiscal and monetary flexibility of more developed economies. They do not have the firepower to support underlying economies, and it's only natural, therefore, that we should expect developing Asia to reflect a U-shaped recovery rather than the V-shaped recovery that would be common and associated with richer nations, in particular China. So the fact that, for example, developing Asia is likely to bounce back in a slightly softer way reflects, I think, their underlying resources. But I think it's also worth pointing out that for many countries in Asia, of course, they never experienced recession. Perhaps only Thailand, amongst the major economies of South and Southeast Asia, experienced a recession. The others declined to around, 2 to 3% growth, and subsequently we do expect to see something of a bounce in 2021.
Okay, so that bounce will be critical in terms of what the markets have priced in for the recovery as well. And I'm just curious if you think the markets are reflecting these economic realities.
Well, markets are reflecting an $8 trillion wave of liquidity coming from developed markets right now. It's hard to gauge accurately whether or not local markets are reflecting and pricing in growth expectations for next year, when really what they're trying to assess is the likely impact of a weaker dollar and subsequently the inflow of capital from foreign investors, which clearly is sparking animal spirits amongst retail investors as well. So at a global level now, I think that observation is consistent and commensurate with this liquidity story. Overwhelmingly, bond markets, equity markets, and currency markets are having to take into account what this liquidity actually means for them.